Good morning, everyone.
Good morning.
We'll start today because let the people join meanwhile because the topic is big. Though the content of PPT may be less, but the topic and the talk or the material which each of these panelists will have will require one panelist will require 1 day. So to get more knowledge, we will start immediately. Friends, welcome to the new webinar of Mehta Mehta. As usual, every Saturday we are meeting. Thanks for all your support and your participation and enthusiasm. Today's topic is valuation under different tax. This topic, why specifically we have taken is because under Companies Act, or I will say as a CS, you are a chartered accountant or cost accountant, any business professional or consultant or advisor, you are taking any corporate action and you require the valuation of shares or other securities, it will be different value. You will think from where to value, what will be the basis, what records will be required, and who can value it. Friends, it will change based on the kind of company, the volume involved, and also the stakeholder involved. It will come as such that, for example, if it is a private limited company, the valuer will be different. If it is a foreign shareholder, then FEMA will come into picture. So merchant banker will come into picture. If SEBI is there, then merchant banker will come into picture. So it will be different valuer at a different time. And of course, under Companies Act now, land and building and machinery both required to be done only by IBBI registered valuer only. As a CS or as a business professional, you require valuation, and it is a very, very, very crucial part of any corporate action. This it's altogether a different profession in itself, and it has a very big commercial impact on business transactions. And up till now, it was not so regulated, not so organized, and not so be reporting. Now it has become more and more responsible, and also the awareness among the stakeholder is also increasing, and the responsibility of the valuers as well. And hence it plays a very important role. I know there are transactions, and people also know that the valuer was contacted and was asked, and he has to ask that which value you want. That was the days also, we all know, was, but now it is not possible. And it is going to be more stringent as proposed valuation entity and the more regulation. And with due respect to this profession, it will reach momentum. It has started, but it has long miles to go. In view of this, I have this today. We have 4 panelists because I wanted all valuers to be there. They can share the experience. Today, our PPT will be limited to the law. I'll request each panelist as and when they feel that they want to speak and put on the value or give your knowledge or experience sharing. Please, you can interrupt and at that moment only share the knowledge, because what we expect from all 4 your panelist expert is sharing of your knowledge. Of course, I'll request each one to give time to other panelists also, and each one to share your knowledge. Participant, you can ask your questions, query in your chat box that will be requested. If required, we'll ask you to unmute and you can also speak. With this, let me introduce all panelists. Friends, today it will take time because 4 people are there. So first I'll introduce Mr. Abhishek Joshi. He's a registered valuer and chartered engineer. His master of valuation in real estate. So land building, he is the valuer. His MBA finance, BTech civil, and I don't know his degree. I'm just reading MIOVRVF AMIEAIV. Honestly, I don't know the meaning. Please forgive me. And he is in the field of valuation since 2009 and has carried out valuation of residential, commercial, industrial properties, cinema, 5-star hotel, ports, business valuation, petrol pump, township, diamond factories, power plant, dairy units, etc. Experience of valuation for honor record, bank CRP cases. Is for various greenfield and brownfield projects and restructuring in India and abroad. He has done techno-economic viability study. He is lender independent engineer for various construction project, infra project of national highway, dams, micro tuning, pumping station. Welcome, Mr. Abhishek. Now I will introduce Mr. Prashant. He honestly has such a big profile. I have said, Mr. Prashant, I will need 10 minutes to introduce. So I have got some brief profile. Thanks, Mr. Prashant. Mr. Prashant, my friend, is also IP, so I know him very well. Mr. Prashant had worked in corporates for 17 years and then since 2018 has started his practice into profession of registered valuer, insolvency professional valuation, forensic analysis, and other consultancy related stress account resolution. He is carrying more than 20 years work experience and done more than 200 valuation under Companies Act, insolvency, RBI, dispute, delisting, etc. He also provides complete consultancy as well as financial modeling, capital infusion, etc. Now I will introduce Mr. Hari. Mr. Hari Surya is a chartered accountant and company secretary. He is presently working as an associate director, Saffron Capital Advisors Private Limited, SEBI registered category 1 merchant banking firm. He has more than 13 years of experience in investment banking activities specialized into equity fundraising activities, namely IPO, QIP, private equity, and debt syndication, merger and acquisition activities. He has handled various merchant banking assignments like right issue, buyback, open offer, delisting, fairness opinions, preferential allotment advisory, and its listing under various SEBI regulation, involved in various valuation under Companies Act, Income Tax, RBI, FEMA. He was special invitee for task force in educational course on valuation of ICSI. Is a visiting faculty at Planet Finance Business School, Hyderabad. Welcome, Mr. Hari. Thanks a lot. Now we have Mr. Sanjay Dayal. My friend, Mr. Sanjay, I'd like you to give your brief introduction because you have given a lot of assignments. He is a consultant, valuer, surveyor. He is a B mechanical. No, sorry, I think I can give it. Mr. Sanjay Dayal is a B mechanical. He is a consultant, valuer, surveyor, and he is operating from Thane. And he is a valuer for machinery since how many years, Mr. Sanjay?
I am doing valuation per se as as a professional since 2016. Prior to that, I have always been into the companies which have got very large assets, starting from Tata Motors, Gujarat Apollo, Reliance, and Oil Cargo. So all these companies have got very large asset, and my interaction with the asset has been plant and machinery asset has been for really for now over 42 years. So my understanding of machines should be a good help to anyone who is basically there. During the course of insolvency evaluation, I had got opportunity to value large ship, chemical plants, robotic companies, windmills. So there are a couple of things which I have done, which I have listed in my in my CV. But I know that difficult to understand.
So any machinery, any industry, you take it. He knows that, and he has valued, and he has experience. He knows the industry player in the machinery who can purchase, sell everything. He values. He imagine even the scrap, everything. He has a wonderful hold on the subject. So friends, we have all these experts on today's panel. And without wasting much time, I will open this forum. I'll request each panelist to say few words for 2 minutes on the topic and your view. And then Mr. Bala, and then Simpal, you can start. Over to Hari, then Mr. Abhishek, then Mr. Prashant, and then Mr. Sanjay, and then Mr. Bala. Thank you. Over to Hari.
Yeah, thank you, Dipti madam, and good morning, everyone. First of all, I thank Dipti madam to giving this opportunity to speak so much of our colleague fraternity as a whole. Yeah, the topic, as Dipti madam said, is very big topic. Actually, it can't be covered in 2 hours time, particularly. But at the same time, you know what I think, Mr. Bala and madam also has done the work, like at least where the valuation is required. First of all, is each and every professional should know first, and under which regulation, under the which act valuation is required. Is it required for the plant and machinery, land and building, shares also? Its shares has been not defined under the Companies Act particularly. Okay, so we have to get it from SCARA, that what is the shares means. Previously under the 56 Act only shares, but now so many instruments. It includes convertible instruments, or so many things on going on. So at the same time, previously the valuation is only restricted to shares. Now at the same time, under the various act, the valuation profession also day by day it is very much increasing under the various acts. Presently the registered valuer is only the recognized under the Companies Act, and maybe in the future, as per the recent valuer bill, once it is passed, the scope of valuation or valuations under the various acts more come into picture. I think hope this will be this session will be more beneficial to all this fraternity. Thank you, madam.
Thank you, Mr. Hari. Yeah, Mr. Abhishek.
We can get the opinions of Sanjay and Hari sir as well. With whatever experience I have had is mainly in IBC and bank valuations and income tax valuations. And income tax valuations also, there are various factors like which we will be covering 11U today, and apart from that 26 section 26 44 AD, section 50C, section 56 2B, such sections also are important, which everything cannot be covered in today's lecture. But as you go deeper in the field of valuation, we come to know that there is no end, and we cannot find the depth of the subject. So deeper
Right.
you go, complicated it gets going. So for example, if you're conducting a valuation of a simple hotel, you can do it by land and building method as well, the investment method, income capitalization method, thumb rule method. And so accuracy cannot be determined, so you have to be very realistic while making all the assumptions. So study in valuation field is very important.
Right. Thank you, Mr. Abhishek. Mr. Prashant.
Good morning. Thanks, Ms. Dipti, to give us the opportunity for this seminar and to present our views. And I also like to say thanks to my all participants, those who are having a time today to listen us. Friends, though I'm a chartered accountant, valuer, IP, but I would just like to say valuation is an art. And I believe all of us have that art, because we do use this in day out. You may start with anything where you put something to someone to say, this is what I will pay. That's a valuation for you. What we do as a valuer, that we just put a mechanism, we see according to the law which fits, we also put assumptions and we validate that, and we try to give a valuation, which maybe as an art. Nobody can say that I am right, or my other panelists also, I can say they are right or I am right. It depends on the circumstances, situation, assumptions, and the business what they are valuing. The purpose to do value is maybe defined in the act, but the principle is that you must understand the business, you must understand the asset, as Mr. Dayal said. Then automatically something will come in your mind. This is how I can value, and of course, methods and methodology we'll discuss during the course of the presentation. Thank you.
Thank you, Mr. Sanjay, please.
Good morning to all who are present in this, basically webinar. I am really thankful to Madam Dipti, Dipti Madam for giving me an opportunity and let people know. The first thing that I understand that the valuation always follows a story for what exactly the valuation has been done. Like I can tell you that the valuation which has been done for IBC, the fair market value, the liquidation value, the realizable value, which is, has got three different understanding that at what for what exactly this valuation has been done. The new things which are now coming also is that what is the potential of a particular asset. Like I have recently done a valuation of a company which is basically into manufacturing of robotics. They make solar panel cleaning, cleaning arm. They do sludge cleaning. So there are some opportunities where exactly you get a situation like this where you have to understand things right from the beginning and then arrive at a value. The new concept which is now also coming is valuation for insurance. For insurance, the valuation has to be done for the replacement. That if this asset which is getting insured today, if this needs to be replaced after say 10 years, 12 years, how exactly the concept of valuation will happen. Now there, in fact, the gross blocks and things like that comes into play, and also that what is the new replacement value which is there. It also calls for understanding the things through the devaluation of currency. 100 rupee, which is which you are buying in 2010, will require 140 rupees to buy in 2022. So there is a RBI index which is required to be taken for that particular valuation. And the new concept also which I am finding in IBC is that asset retirement concept. Most of the assets which are not in operation since last about 4 or 5 years, you will find that these assets have become something which cannot be used once again, despite that the life is there, because a lot of technological advancement has happened, things like that. Beg your pardon? I couldn't get any question.
Oh, some crosstalk was
there. Okay. So this was basically something which I have come across. I keep on learning, as I get assignment, and based on that, probably, in fact, the concept is drawn and a valuation has been assigned. So the valuation is today of plant and machinery has become slightly more complex, slightly more, you can say, slightly more challenging, because you have to know the asset before you are, and there are a lot of assets which after the after their basic economic life has finished are still in operation. I have recently valued a deep dive ship of 1984, which was constructed in 1984 and was destined to be scrapped after 25 years. But the ship is still working and it is used for deep dive operation, SAT operation, and the air dive operation. So it depends upon how exactly the assets are being used.
Okay, thank you.
So how the asset is being used, try and get the, I think the basic, I think the intrinsic value which is required to be given, and for what purpose. Is it for resolution? It is for, is it for liquidation? Is it for insurance? So all those things are going to come into play. I think the new concept has come also, merger and acquisition. Some of the investors who want to take over a company.
Mr. Sanjay, I'll interrupt because we have a lot thing to discuss. So we have to.
Fine. Okay. So I end up, yes.
Yeah, thank you, Mr. Sanjay. Mr. Bala.
Thank you very much for giving an opportunity.
Yeah, thank you, Mr. Bala.
Good morning to all of you. I have a great pleasure in welcoming you all, including the panelists, the series of luminaries in their respective field with the different categories like merchant banker, London building, London machinery, etc. And I'm sure they will definitely share their practical experience. They have all the things. All said and done, value, definitely when we go to the market also, we ask, what is the value I am getting for the money I am paying? That is the concept. This is true in financials also. Because when we look up the financial statements, it should give the right reflected value. That is where the valuation comes to the picture. So valuation, when you are talking about it, gives the accurate value of the business. And it is not only going to impact it today, it is going to impact it today, tomorrow, even at the point of the exit. That is what it is. Because as Sanjay was telling, he was valuing something which is going to be scrapped after 25 years, what is happening. So it all depends upon for what purpose you are valuing. Valuation for income tax different will be different, insurance purpose will be different, merger and acquisition will be different. If somebody want to get into the venture capitalist, they want to fund the money, that will be different. So we have a various regulations and various methodology, different categories which are actually there. So I think the subject is ever-learning subjects because value cannot be static. It will change from time to time. You all might be knowing, you might have purchased a landed building or even your flat some 10 years, 20 years back at some price. Today, at a particular locality, depending upon, it will be fetching a far more value than what you had purchased at that particular time. So naturally, value being a changing from the time to time, depending upon the circumstances, depending on the regulation, we have a lot to learn. I think today's session will actually give us a better learning experience with the sharing of the expertise here. Simple, I think you can start the presentation.
Thanks.
We'll move on.
Simple, you can start. As understood, it's a very subjective subject. We have taken a lot of time today, almost 11:30 for introduction. So I will, but if required, we can carry up to 1:30. And if we find and participants are interested, we may roll over to next Saturday. We try to avoid, but we'll try to finish it. Now it is only panelists who will be unmute and put your any inputs. Basically, all participants wants your practical experience, interesting experience, all that. Thanks a lot. And I'll suggest Mr. Prashant, keep in mind all our majority CS, they will be like to know more about share valuation since you are doing that. Okay, thanks. Yeah, over to Simpal. Start, please.
Thank you, Dipti ma'am. First of all, very good morning to all. I welcome you all to the webinar organized by Team Mehta and Mehta. I very quickly introduce myself. As you know, my name is Simpal Kumari and I have recently joined Team Mehta and Mehta as an associate partner. I have experience. I am qualified CS with over 15 years of experience and I'm a law graduate also. As regards my presentation structure, my presentation will cover the valuation requirement under Companies Act, IBC, FEMA, income tax, and SEBI also. So we will begin with what is valuation. So it is the process of finding out or assessing the present or expected worth of maybe it is a business, it may be of company, it may be assets, both tangible and intangible assets, liability of the company, and shares of the company, shares, debenture, etc. All are covered under valuation. There are certain factors which affect the valuation of these items. It may be the growth rate of the company and profit. It may be profit margin of the company, future earning of the company. What is the value of tangible, intangible assets, and company's management also affect the valuations of the company. The company's management means how stable is the company management, whether the professionals are included in the company management, or where the company is dependent on the one particular person or on another person, or liability has been dispersed to several other persons. So all these factors affect valuation. So here I'm providing the valuation which are covered by different acts. Companies Act, IBC, income tax, FEMA, SEBI, and regulations thereunder. Concept of registered valuer was introduced for the first time with effect from 18 October 2017 by the introduction of the Section 247 and Companies Registered Valuer and Valuation Rule 2017. Before this, there was no specific requirement as regard who can be the valuer. So generally, company used to approach the chartered accountant for the valuation of shares or valuation of business, but there were no specified qualification or experience that they need to possess for valuing the company. There is the definition which has been provided under Section 247 of the Companies Act 2013. It provides that where a valuation is required to be made in respect of any asset, shares, debenture, or other asset or worth or liability of the company, it shall be determined by a person having such qualification experience as may be prescribed under the Act and the rule made thereunder. Next is I have presented in short the rule of registered valuer under Companies Act. Different sections are there where there is requirement of obtaining a valuation report from a registered valuer under Companies Act. So first is
say registered valuer means what here? Simple.
Yeah, registered valuer means the person who is registered with the IBBI, who has passed the relevant examination as required under the IBBI.
So under Companies Act, it is now only IBBI registered valuer, right?
Yes, right, ma'am.
Yeah, okay.
Uh,
Mr.
Madam,
Hari,
Madam,
yeah.
can I just intervene? There is
Yeah.
a small correction. Registered valuer cannot write that he is registered with IBBI. This is something which has been conveyed by IBBI directly. We are registered under Companies Act. The examination was conducted by IBBI, and it is getting regulated by the different RVOs regarding of which you are a member. So in fact, I mean, all the registered valuers are basically valuers under Companies Act 2013. And yes, they have become the valuer because they have passed the examination conducted by IBBI.
Yeah,
But
got it.
still, IBBI maintains this, that is, I mean, the same thing that they say, that neither we could write that we are government registered valuer, nor we can say that we are registered under IBBI Act. These are the two precautions which was conveyed to us. This was just one thing which I wanted to convey.
Okay.
Thank you, sir. So here is in case of allotment of security for consideration other than cash, the company need to obtain the valuation report. In case of equity in case of issue of equities are also required. In case of
Sweat equity share, no?
Sweat equity share.
Issue of sweat equity share. Second.
Yeah, issue of sweat equity share. In case of further issue of shares which are covered under section 62, valuation report is required. And next is this provision of money.
Yeah, Dipti ma'am, I just want to say, I believe we need to also, update to our all professional friends that nowadays, there is no way where we can, avoid the valuation report. But normally what happens earlier, we were used to do it wherever it's not required, wherever the forms and all is not asking about the valuation report. We just say that, this is not available or NA karke. But I believe going forward, even the institute, even the MCA also is, is sometimes sending an inquiry that the valuation report is not attached. So I think we should update to all our professional friends that nowadays everywhere we should have a valuation report according to the requirement or the eligibility of the person, whether it's a registered valuer or merchant banker. I believe most of the things is already been now covered into the registered valuer. So we should encourage that everyone to take a valuation report, though it may be for compliance also.
Okay. Okay.
Yeah, Madam Hari Surya here.
Yeah, Hari, please. I was asking you only. Yeah, please.
See, if you guys are any people doing the corporate actions, okay, say buyback, okay, rights issue, okay, and fresh issue, okay, any fresh allotment of shares, fresh issuance of any instrument, particularly under the Companies Act, okay. IBBI has given a circular saying that valuation is compulsory on the following 1, 2, 3, 4, 5. They have described some of the sections. Valuation is compulsory. It means that other side, if you see, valuation is not at all required. Okay. Example, company may issue rights issue. Okay. General, if you observe, as per the circular given by the IBBI, rights issue, there is no valuation is required. Yes, valuation is not required, but at the same time, at what price you will issue rights issue? There is no pricing mechanism. Even the listed company doesn't have any regulations, particularly in case of a rights issue, at what price board of directors can issue to the shareholders. So at least internally of the management also should satisfy themselves at what price they can issue the right shares. As Prashant rightly pointed out, in some of the ROCs, they are sending the notices, okay, for justification of the pricing, okay. So in these circumstances, don't go with the actually what law says, particularly interpretation in the valuation related activities. Nobody knows when the this kind of notices will come into picture. We have to tell our clients or our fraternity to, so hardly what it matters. You have to get only one certificate from the valuer. That's all. Okay. It should not be a non-compliances in the future course of action from any regulatory part. I agree with the Prashant, whatever you say. Thank you.
I think in income tax also, the question arises that what is the base of this valuation? Because income, it will be added to the income or wealth of the people.
Exactly, madam. Exactly.
Right?
Correct.
So it will be compulsory sooner or later. You will be compelled to take it to justify your valuation. So I think, yes, you are right. For any corporate action, you need the valuation. On who decided and why decided this price?
Exactly.
Yeah. There is a question in chat box, ma'am, newly incorporated company after 2-3 months come up with private placement. So it is mandatory to all company valuation report. Panel, please.
Yes, ma'am. Absolutely. Because if any price which is above the, if they're not, doing, if they're doing a professional allotment or any price which they are doing afterwards, except the face value, they have to take a report in section 42.
Okay, thank you. Yep. Yes, Simpal, go ahead.
Yes. Next is the valuation required. One of the circumstances is the payment other than in cash by director to director by way of compensation for loss of office. The next is for non-cash transaction involving director. Then the scheme of corporate debt restructuring also there is the requirement of valuation report from registered valuer.
I just want to add also one more thing here. Of course, this may not require per se the valuation as per the statute, but we have seen many, disputes, in the for minority or maybe between the shareholders or maybe between the partners. So people are, requesting for valuation for that also, because that may not be coming into the as a another section, but it is required for the people to decide about this. So friends should be aware that there is a requirement of evaluation for that.
And also the transfer, sale of business.
Yes.
In that way. Okay. Similarly, for transfer of equity share, there is no mandate to value under Companies Act, but it shall be required for income tax for computation. Yeah. Yeah. Okay.
Yeah, she's right.
Yeah.
That is right. You are right.
Okay. Yeah, Simple.
So next is the in case of offer of takeover of an unlisted company where there is a compromise and arrangement, there will be requirement of valuation report. Further, in case of swap ratio under scheme of compromise and arrangement, it is required. Next is any scheme for the reconstruction of the company involving merger, amalgamation, or maybe it demerger. Exit for dissenting shareholder of transfer company. For this purpose, there is also need to evaluate shares of the company. Section 236 provides for the purchase of minority shareholder. Where this purchase minority shareholder, then also valuation is required. And further, as per in case of report by company liquidator, in case of winding up ordered by the NCLT, it is must. A voluntary winding up also required valuation report. And the next is the company liquidator to accept shares, etc. In this case, valuation is also required, which is covered under the voluntary winding up. So the rule 3 provides that who can be the registered valuer. So the registered valuer must need to be the member of registered valuer organization. He must possess the rule as has been prescribed in Rule 4. And he should qualify the examination which has been mentioned in detail under Rule 5. He should be a fit, proper person, and he must be the resident in India.
So fit and proper person under which act?
Madam, actually, yeah, can I interrupt?
Yeah, please.
Yeah, see, actually, fit and proper person is not defined under the Companies Act, but you should take it from SEBI Act. Okay,
Right.
Who is fit and who is proper person? It is not like a, see, example. I'll tell you one small example. Okay, so example, I think everybody knows a registered valuer means maybe an individual or maybe a firm. Okay, you agree? Okay, even 3-4 individuals come together to start valuation advisory only as a firm. It is allowed under the IBBI and allowed under the Companies Act also, the valuation rules. Okay, and now example, this valuation firm. Okay, this valuation firm have one of the valuer is not competent to act or maybe something against him. Is the firm entirely to fit and proper person to do this valuation or not? We need to think those angles. So then only everything is properly organized, properly against no notices, nothing. Then only those guys only will be eligible to act as a registered valuer only. That means clean sheet. persons only can act as a registered valuer.
Yeah, there
So,
is a, there is
yeah,
a
so it is,
comment, also RBI talks about fit and proper person.
Yes, yes.
yeah.
Okay.
So in
Yeah.
securities, and Exchange Board of India is also defined somewhere. It says a good reputation and character of the person, but that is something subjective. But this is what they said.
It will be decided by the court of law. He actually is a fit and proper person or not.
I'll put that honestly, this entire valuation subject is so subjective and depend on so many circumstances and the situation and the judgment. So I think it is, if challenged, it's too difficult and complicated. Am I correct? Looking at and listening all.
Absolutely right. Absolutely
Because-
right. In all our reports also, we put a disclaimer and saying that this is art and this is assumptions. It might change and it is valid only for the day when we are given the valuation.
Right. Yeah. Thank you. Yeah, Simpal, go ahead.
Yeah, Rule 4 provides for the qualification and experience for being registered as a registered valuer. So there are 3 categories of a degree or diploma which the person should held. One is the person should be the postgraduate degree, or he should have postgraduate diploma from which university or institute recognized or incorporated by law in India, and he should have an experience of at least 3 years. Or person can be bachelor degree or equivalent degree. The university is the same as mentioned earlier, and he should possess the experience of at least 5 years. And the third category of is that a person should be member of professional institute like CA, CS, cost accountant, which are covered under the established. The university or institute is covered under the Act of Parliament, and he should have experience of at least 3 years.
So this rule you have taken, rule of the Companies Act, right?
Yeah, Companies Registered Valuer and Valuation Rule 2017.
Yeah, so in that case, if we say that in under Companies Act, if machinery and land need to be valued under merger amalgamation and all that, then it should be also through RBBI registered valuer. Again, I mean to say who passed the exam.
Yes. Yes, ma'am. All the pass.
Panel?
Yeah, ma'am, can you repeat the question?
I was thinking that these are telling that university, institute, and by law and bachelor degree and all that. So under merger and amalgamation or kind of thing, when it also involve land, building, plant machinery, so it will be required to be valued with the valuer who are passed the exam under IBBI, right?
Absolutely right. Actually, what happens in such cases, the mandate takes by the person who's doing the entire valuation for the company, because there is no requirement to have a separate appointment for land building, plant machinery and the SFA. What they do, they appoint a one registered valuer who coordinates all 3 and give a combined report as and the value of that. It may include those reports, but it requires a IBBI registered valuer only.
So even though combined report, but that valuer firm or whatever has to take the land building valuation and plant machinery from that IBBI registered valuer.
Yeah,
Absolutely
you're right. You're right. Dipti,
Absolutely right.
Dipti, what happens is, because there are categories of valuer has been defined. There is a land and building and plant and machinery and the financial services that has been defined. In the company, all the 3 will be there, as Mr. Prashant said very clearly. The firm which is taking it, they will obtain the necessary valuation from the different people, and ultimately, based on the report, they will give the combined report by one person.
Yeah. Even though it may not be as an entity, but even the one person, suppose one lead valuer for merger acquisition, they can take a report from 2 and then include in their report. But it requires that it has to be IBBI registered, independent,
Right.
And the different class of valuer.
Yeah. So this clarified participants that all the valuation from valuers who have passed the exams conducted by IBBI. Thank you. Yeah, carry on.
So there is a different category of assets for which a different person is required to value. And their experience have also been mentioned. So when the asset is land and building, then the person should purchase the degree like must be graduate or postgraduate in civil engineering or architecture or town planning. And he should have experience of 3 to 5 years minimum. In case of valuation of plant and machinery, the person should be graduate or postgraduate in electrical or mechanical engineering. The experience is same 3 to 5 years. In case of securities or financial assets, the person should be a member of ICAI, ICSI, or he may be the member of Institute of Cost Accountant of India, or he may be MBA with a specialization in finance. And he should have experience of at least 3 years after completing graduation.
Panelist, here I have question. Can you go to earlier slides?
Yes, ma'am.
See, it says land building, plant and machinery, security and financial assets. But there will be other assets. What about software? What about, intellectual property right? What about kind of, robotic, what just now one of the panelists mentioned. So actually gold and precious and semi-precious metal, gems, stone, nowhere that is covered. So
that commodity is not covered so far, ma'am. But with regard to except gold, jewelry, and all, because gold jewelry somewhere in income tax is also separately defined that there has to be valuer for that, but that is registered in the Income Tax Act. However, in this category, they have not separately defined it. So what we do, people used to take a help of that expert and give a valuation, maybe as a SFA or maybe as a plan measure. But normally, what we do, we take as a SFA value in that, and then take a expert value, inputs, and then give the valuation report. With regard to all other assets, which is not covered in this 3 category, like IPR, like software, like lots of what do you call copyrights and all is there. Everything comes into the SFA.
Example, madam, it is an intangible asset. So you mean to say, correct?
right.
Yes, yes. See, if you observe sweat equity of shares, okay, it's involved 2 things. Okay, you have to value the sweat separately, that is intangible assets, and at the same time, share valuation also will be there. Okay, 2 things will be there. As a SFA, as rightly Prashant said, the sweat equity involves these 2 things also by SFA valuer only.
Okay. Okay. So basically, you get it valued from expert on the field and then take it as a SFA.
Yes.
Yeah, but I think the time will come that there will be specialized people also valuing this.
Yeah, certainly. But as per the process also, we normally disclose in our report whether we have taken any expert opinion also in the report. So in that we include this and then give our valuation.
Yeah, because I myself faced, I had had to value the platform, that entertainment platform, and I was not having from where to value it. So it's become difficult. So friends, keep in mind, you have to get it done from specialized, but though they will be covered under SFA valuation reports. That is the way out in between till the time specialized and specification arrangement is not made. Yeah, thank you.
We used to get, sorry, Mr. Bala, we used to get assignments from our CA friends and sometimes CS also with regard to intangibles, impairability, because they need to see whether it is impaired or whether it is intact. So we do separately intangible valuations also sometimes, only for intangibles.
Mr. Hari, your comment, you want to give any comment?
Yeah, yes, madam. Yeah, whatever you said is correct. And I think maybe little bit pause here. Maybe I think the expert of land and building, where it will be. Generally, these guys are experienced and where it comes from, under which act they are doing. Maybe they can explain little bit about land and building and plant and machinery, particularly in 2-3 minutes for, I think, maybe better understanding for everyone.
Yeah, I will request Mr. Abhishek and Mr. Jala, to give your views and any additional point on land building and plant and machinery, please. Valuation. Mr. Abhishek?
Yes.
Yeah, please. Since we have covered land building valuation So, how practically you maybe face some interesting case or experience difficulty and all that. For 2 minutes, if you can share your experience.
Yes. So mainly in land building valuations, in IBC cases, what I have experienced is whenever the case goes into IBC, the COC members already have some valuation in their hands, and which is way beyond what we actually value at the time of liquidation or at the time of insolvency, and that creates unnecessarily hitches, which may lead to asking the questions to COC itself that what was the actual value, because recently I have done valuation of a company which was earlier done at say for 38,000 crores, and we so at the time of insolvency it was valued at hardly 3,000-4,000 crores. So why does it happen in so enormous? This is loss of nation, loss of public money in short. So ultimately bankers have to take haircut. So we have to go to the roots of the problem, that at the time of funding itself, bankers or the lenders need to be very careful while evaluating the assets, especially whenever there are large lands, large structures, large buildings. So the lands in a hectare, say 250 hectares of land with various assets on the constructed on the side. Many times it also happens that the lands are leasehold lands. So while doing the valuation of assets, you need to always keep in mind that you are not valuing the assets, you are valuing the interest and rights of that company in that assets. Okay, so interest and rights is a very important word, because if I give you a land for say 10 years for lease and you develop everything on that, and after 8 years the lessee is asking for valuation. So in lessee will be having this asset only for next 2 years because his lease is expiring. We have to first check whether the renewal clause is there or not in the lease, or does the lessee have to hand over the land back to the lessor with a reversionary value. So in land and building, and in my experience, valuation of shop is easy, flats is easy, offices is easy, but when there is empty land, is most crucial case that you have to consider the rights and interest in the property of that owner or the company. So mainly valuers lack in that. They ignore, they just go by land rate into land area method. They don't look at what is the potential of the land, what zone the land, in what zone the land falls. Is that converted to non-agricultural use? If it is converted, so what is the use? So if many times we say the land is converted to non-agricultural use, but we don't see the purpose for which it is converted to NA. So it is converted for agro-based business. So almost it is agricultural land again. If it is converted for industrial, then its utility changes. If it is converted for commercial, again utility changes. Warehouses, again utility changes. So people just go by the thumb rule method. Yeah, NA hai, okay, NA hai. Land hai, itna area hai, kitna rate chal raha hai, 10 lakhs rupees per hectare. And they just go on multiplying the area by the rate. So it is not the case. You have to derive the maximum benefits the land owner can derive out of that land, depending on the usage and utility. So utility is at most important word in the field of valuation. So if you are going for the exam and you have a pen, I mean, you don't have a pen, you can buy that 10 rupee pen for 500 rupees as well. So it's not the value of that pen, but value depends. So at that moment and the utility of that property. So utility needs to be considered very seriously, and alternate use of that property also has to be given thought on while considering the valuations.
Okay, thanks a lot. Very interesting point. You said you don't value the land, but you value the right and interest of the corporate or the
Yes.
owner in that land. Very, very important point. So friends, we have to keep in mind what is our right, and that will be valued.
Probably you'll be also looking into any litigation, etc., and all these things
Yeah,
pending in the
yeah,
court for a long time.
yeah, yeah. Contingent. And not only that, if any, common road for public over the years is getting passed, or if there is any sewage line is going, so then you cannot touch, and that way it keep on adding the different thing. Thank you, Mr. Satish, for your comments and attending.
So because you know what happens is in case of the Hindu undivided family, if the land is purchased or something like that, the child who is born, he gets the right to question the transaction after attaining the majority for a period of about 10 years. That means litigation could be expected even after 25 years or 30 years. That is the point here. Because if the land is purchased from the agriculture, etc., and all the things, I think that point, because there have been cases in the past, and the companies were to pay the huge compensation to settle the things.
Yeah, yeah. Thanks, Mr. Abhishek. Mr. Sanjay, your comment on valuation of plant and machinery and some interesting experience you can share with the participants.
Well, in fact, a couple of very interesting things have come. It's, I mean, it is defined also that whenever we are trying to value any asset, couple of cases which I have done where exactly, a lot of interesting informations have to be, have to be found out, was basically a case when I was doing of a VLCC. VLCC is a very large crude carrier. While I was valuing the very large crude carrier, there were four aspects which was associated with it. The first was, what is the speed of this ship? Because currently now this was a ship of 2005. Currently the ships which are available for such kind of applications have got 18 nautical miles of speed, whereas this ship was having 15 nautical miles. So there is an impairment because of the because of the speed of the this, because it will take a longer time to complete a voyage. Secondly, it was, what is the payload capacity to the dead weight? Because generally in logistics we say that 83% should be the payload and 70% and just 17% should be the dead weight. Whereas in this ship, I mean, the payload was only 78% and the dead weight was close to about 22%. So this was another impairment. The third impairment which has come because of the because of the pollution, because after 2021 no ship can take a voyage unless it is using a low sulfur engine, and low sulfur fuel is almost about $10,000 costlier compared to if you are using the normal engine. But since you're not allowed to basically send it out, so you will have to put a scrubber, so that the scrubber, I think we will recall that when BS came, most of the cars were required to have a catalytic converter, so that you can convert the exhaust which is coming out of that. So these are a couple of factors which needs to be considered when you are trying to value the impairment. Now, recently, I was also doing valuation of an automobile company. Now, with automobile company having a stress right now that most of these scooters, and this was this was a vendor to Bajaj. Now, Bajaj is saying that in next 3 to 5 years, they will have more than 50% of electric vehicle. So, I mean, like suppose if you have got a capacity where you are making, say, somewhere around 1 lakh crankshaft, and that was the capacity of the plant. Now, if the plant is saying that I will convert my production 50% to basically electrical vehicle, there the crankshaft is not required. So such kind of factors need to be considered when you are doing a valuation. So this is what exactly something which I've come across. Now recently, when we were doing valuation of basically offshore equipment, those though these equipments have got enough life left over, but there is no, I mean because there has been a technological change, these assets do not have any value in the market. So, we'll have to value them as scrap. Or, sometimes you also have to value certain things because of the, change in the basic technology. Like suppose the towers of a particular, mobile operators are there. It needs to be, generally you have a license that you will be operating this for 3 years, 5 years, or 7 years. Now, when you are trying to dismantle them, you will have a cost of dismantling, plus you cannot throw it anywhere because it has got a lot of radiation, activities which are there. So these are, some of the activities which needs to be considered, that what kind of contamination it can create after it is getting discarded. The same thing is there with the e-waste also, because when we get e-waste, we need to ensure that how these can be discarded. I mean, you cannot just discard it, I mean, the way you want. You are not supposed to throw certain things in the dustbin. I mean, we don't know, even the batteries cannot be thrown in the dustbin. The batteries, the automobile batteries needs to be discarded in a particular fashion. Since I was part of the automobile company, we used to have tires, batteries, and things like that discarded in a particular fashion. Instead of getting money against that, we used to pay money to get it discarded. So these are a couple of aspects which needs to be taken while you are doing valuation of such kind of assets.
Thank you, Mr. Sanjay. Very interesting. So friends, it is that we just look at the machinery and say that, okay, this is the this built and it was running company. So this machinery should have a maximum value, but we should have knowledge that there may be new machinery. So there may be other machinery, technology has come. So accordingly, this machinery may not have valuation, even though if machinery is ideal. The moment the machinery is stopped, the valuation reduced to the great extent. The machinery is working, factory is working, then the value is there. And of course, as you mentioned, that you require also dismantling charge and also removal. So you should know not only the things, the practicality, but also the relevant laws which require you to make it review what all other cost is required. Accordingly, valuation done. It's not that valuation of that particular machinery or land. Like for land, if there is a government project is coming, and nowadays government offer a big price. So if your land is passing near through or some road project is coming, you will get 4 times value. So accordingly,
very correct. In fact, let me tell you, right now I am doing project of all. I am virtually working on relocation. This Mumbai-Delhi highway, which is getting constructed. So between Virar to Palghar, I am doing relocation expenses, and rehabilitation expenses for 7 properties which are on the way, and there are a couple of other also which is going to come through. And in this case, the worst thing is that people who are there to really assign the relocation expenses are not aware about the rules which are there in this. So I mean, you said very well. In fact, someone was saying that whether it is agriculture land or it is a non-agriculture land, I mean, your compensation is directly related to whether you are relocating from from agriculture land to a non-agriculture land, or from a non-agriculture to agriculture land. All those things have to be taken care, along with all the infrastructure which is to be there. I was recently doing a case of a very large holding company, the global advertisers. I think they are known very well, in the market. They have got a holding, I mean, a very large holding in 4 acres of, 4 acres of land just next to the highway which is there. Now they are supposed to relocate from there because the road is coming there. So I think that this is a land which was a non-agriculture land. So the compensation came down drastically because it was a non-agriculture land and they were using it for agriculture. But there is a recent circular also which has come. If you have been using a non-agriculture land, agriculture land for a non-agriculture purpose for more than 3 years, it will automatically get converted as a NA for compensation. So there are a couple of facts.
Thanks.
Couple of things which come through.
Yeah, and when it become NA, then you know the value increases, and also that the duty, stamp duty, transfer duty all get increases. So it has its own implications. Yeah, so friends, this was the inputs as regards valuation of land and building and plant and machinery. This was necessary for the knowledge of everyone, so that you get the idea that we are not just doing valuation of land on building and plant and machinery, but our rights on that and the relevant circumstances affects the valuation. Yeah, simple. You can further start now with the.
Now, I will brief the different category of valuers we are required under different acts and what is the valuation method to be adopted there. So first is the Companies Act. Under Companies Act, only a registered valuer can value. And the method to be adopted is the internationally accepted valuation standard, or it may be the valuation standard which has been prescribed by the registered valuer organization. Under FEMA and RBI guideline, for in case of listed shares, it has to be valued by the chartered accountant or SEBI registered merchant banker. And where the shares are unlisted, then it has to be compulsory valued by the merchant banker. And as regard method, they have to adopt any internationally accepted pricing method. Under Income Tax Act, there is two method has been prescribed. One is a discounted cash flow method. So when the valuation is by DCF, then it shall be done only by the merchant banker. And where the fair market value is based on other method, then it can be done by any registered valuer. And method under Income Tax Act is the discounted cash flow method or net asset value method. Under SEBI Act and regulations, valuation has to be done by the merchant banker only as per SEBI guidelines. Under IBC, only registered valuer can give valuation. And here registered valuer means registered valuer as defined under the Companies Act. And they have to follow international valuation standard.
1 minute, go to that slide.
Yes, ma'am.
So I'll require panel to give your view on this, because simple, this covers your valuation method and the who will do valuation both, right?
Yes, ma'am.
After there is no extra slide on this, right?
No, they are further discussed in detail also. What are the
detail you are covering?
Yes, ma'am. This is just a brief to give an overview of valuation.
Okay, at that time we'll come back. Okay, go ahead.
Yes, ma'am.
Because we want to discuss the who can do and what is the valuation method in detail.
Yes, ma'am.
From panelists, their views.
So there is just mentioned the function and duties of valuer. Valuer should be impartial and should give a true and fair valuation. He should done the valuation due diligently, and the valuation should be as per the rule prescribed under the respective act. He should not, further important is that he should not undertake valuation of any asset where he has been interested at any time previously 3 years, or after his appointment as a valuer after 3 years. And further, valuation report must be signed by the registered valuer only. Rule 8 prescribes about the conduct of valuation or valuation standard. So valuation standard, valuation will be done as per valuation standard which has been notified or modified under Rule 18 by the government. And until since there has not been a complete valuation standard notified or modified, so till then valuation can be done as per internationally accepted valuation standard or the valuation standard which have been adopted by registered valuer organization. In this regard, ICAI they have introduced Indian valuation standard, which are mandatory for its members who are registered valuer, and this is effective with effect from 1st July 2018.
There is one question is appearing here in the chat box. I think it is.
Yeah, there are questions, so but I'm taking, let her complete this.
Okay.
In detail, we will cover everything.
Okay.
Because at that only I wanted that even the what kind of valuation, and again we'll come back to the relevant slide.
Okay. Okay.
Yeah.
Go ahead, Simpal.
Yes, sir. So valuation standard, as I earlier told, the central government is in the process of notifying the valuation standard, and they have formed a committee for this purpose also. And there are some valuation standard which has been prescribed by ICAI have been mentioned in brief. Next is what should be the content of valuation report?
I think simple it is covered, or still you are taking method, or we can discuss now method and all that.
Method is, ma'am, further covered under respective act. And
No, method is coming actually. Method is coming later.
Yes, yes.
So I think at that time we'll take a respective act and
Yeah.
discuss in detail. Yeah. Okay.
I mentioned under the respective act separately.
Okay. Sorry, go ahead.
So content of valuation report should provide for the what is the information about the asset, what is the purpose of valuation, identity of the valuer, whether there is any interest or conflict of valuer with the property being valued, what is the valuation date of report, appointment, etc. Whether the inspection or investigation has been done by the valuer, what is the source of information or nature of information which he relied upon while giving the valuation, what is the procedure he has adopted or valuation standard follow for valuation, whether there is any restriction on use of the valuation report, whether it is restricted to particular purpose or it can be used for other purpose also. All these should be mentioned. He should mention a conclusion and what are the limitations, disclaimers, etc. All should be given in the valuation report. Next is the penalty provisions which are applicable to the registered valuer. So in case the registered valuer contravenes any provision of the act, then fine can be imposed upon him, which ranges from ₹25,000 to ₹1 lakh, and he may also have to refund the remuneration, and he will be liable for the damage. And if the registered valuer is found guilty of professional misconduct, he may be sentenced to imprisonment also, and he may be debarred from the registered valuer organization. His name may be removed from the registered valuer. And there are some penalty which can be imposed if he intend to value for the purpose of fraud. In such case, he may be imprisonment up to 1 year, or fine may be imposed, which may range from 1 lakh to 5 lakh. So now,
so ma'am, just want to say that of course this profession is very flourished nowadays, but the responsibility is immense. The way the fine and penalty is prescribed, this is only which is said that penalty in case of intention to fraud, but it is subjective. But many things you must have seen also, ma'am, that few cases was also filed against the valuers, and they are also IBBI inquiries also going on. So I just want to say all other our friends also that we need to be sure that whenever we are taking a valuation report, that the person is fit and fine, is registered with the particular category whom you are taking a registration, and his registration is valid, as well as there is no such things mentioned in the report which may create a problem in the future. May not be today, but in the future. So all such things, my colleagues should also take care, professional friends should also take care. Of course, the valuer has to take care, that is a different part.
Very important thing, Prasanta, you mentioned this, because this is, friends, very crucial. What we think, like we take any certificate from any other professional, why we should bother? He should bother, and he has given certificate, so we need not check. But it is not that case. We have to check that he has covered everything and he has done proper work, because still there are valuers who are not properly doing the work. So it is our duty that we get a proper report as required by the law. Not only that, in disclaimer or anything, he should not claim or like that he was not provided the information or he was not given this. So then you will be questioned that why you not provided the information. So you have to protect yourself. In addition to that, he should not disclaim the many important thing which it is his valuer's responsibility. So you have to go through this valuation report thoroughly, and we have to see that facts is properly produced. Many times they may miss the one of the asset also. So that's why you have to be very careful the report is given properly. And as rightly mentioned, it should not include anything which will create a problem in future. And also, very important thing that We have to check that a person is eligible to give valuation report. He is registered. You have to check on the site and check that he is fit, eligible as on today when he gives the valuation report. It is our duty, because there are so-called notice given to the people who has taken the valuation and the cases are going on and they are feel guilty that you have not taken proper valuation report, so you are non-compliant. Of course, the valuer will be questioned and penalty will be there, but on you also because non-compliance. So we have to ensure the valuer we are appointing are eligible as per the act under which they are working. Okay, there is a question. What is the validity period of valuation report?
Ma'am, it's valid only a day of the date when this valuation is given. No other validity. There are people saying it's valid for 3 months, 6 months, but nowhere. It is valid only for that day and that moment when we sign. That's all. As I understand, I think other my panelists can also put their inputs on this.
Mr. Hari?
Yeah, actually, there is no concept of validity of any report, particularly, as Prashant rightly said. But the thing is, why this validity period generally people will ask for. Okay, if you go in depth, business continuity always will change because we are doing on the going concern basis. Okay, 31st March 2022, the results or maybe balance sheet is different from next quarter, that is June, April, May, June. June ending, business financials are different. Okay. So, as example, on 31st March 2022, my company valuation, maybe my share price is only 50 rupees. Okay. But in between, sales have been increased, profit has been increased, and my net worth has been increased. So on the June quarter, my valuation will not be 50 rupees, definitely. It will be more than that. Okay. So in this scenario, there is no validity. There is no law says anywhere that, the valuation will be only for 6 months. But RBI says, if you observe FEMA guidelines, there is a concept of maybe 6 months or recently 3 months also as per the new FDI regulations FEMA. Okay, the validity of the valuation report is only for 3 months, that is 90 days. Okay, so generally in the normal parlance, there is no validity.
So since
I would just like to add here one thing. Initially, when RP was giving us the valuation, they said that it should be valid till it is not going for liquidation. So if the purpose of fair market values, they're on plant and machinery, tangible asset, which I am saying. So they expect that it should be there till the resolution time, which is there, which could be 6 to 8 months time. But if it is going for liquidation, then in that case, up till 2 years before, generally they used to get a revalidation done. But now even that has stopped. It will, it depends upon the RP. If the RP feels that the report is something which is, which can be used for liquidation also, because there is a liquidation of value which is already given there. Now there, I think there is the subjective, you can say, understanding of the RP that how is he going to, I'm talking about IBC valuation.
Right.
So yeah, so it depends upon the RP that how is he going to use that. Now, if he feels that he has to get another valuation done, and it is more than 6 months, then in that case, I mean, there is no validity which is given there. But up till 6 months, the same report of fair market value can be considered. Even for liquidation, also it can be considered. But in the liquidation, okay, if it is going for liquidation, people are not realizing that for liquidation, there are 2 types of liquidation. One is orderly liquidation. So in my CIRP, it was for orderly liquidation. Subsequently, when the liquidation is actually happening, maybe that the person says that you have to vacate my land. So you don't have time. So you have to also give a value of the forced liquidation. So it all depends upon how exactly it is, it is working. In the tangible, I think 6 months is fairly, which everyone will agree.
Thanks.
Yeah, there is also a concept in the financial statements, because whenever we deal with the financial etc. and other things, it says the last audited balance sheet not more than 6 months. So if it is more than 6 months, again, they wanted to get it auditing done.
Yeah,
So
the
I
same
think-
way, I think Mr. Hari commented that way only because RBI says that since last 3 months or like that,
Yeah,
they
yeah.
know the validity period, that way
Yeah.
only he calculate,
So
right?
people
Mr.
go
Hari?
by that. If it is longer than that, then people will insist for the revaluation.
Yeah, right. So it is.
But ma'am, just want to update our professional friends what they are trying to ask, whether the same valuation report can consider, suppose for 3 months valid, and suppose one equity infusion is done today and after 2 months, so that same report can be used, or for same report can be used for some other purpose also. So I feel there is an embargo. I think it cannot, because the valuation report always said this is valid for that day. I am talking about other acts except the IBC. IBC has a different process where we have to deal separately.
Yeah.
Yeah, there is a relevant question is there in that concept. In fact, there is somebody has put a question. The
So,
company allotted share on the right basis of the foreign shareholder in August and March. Will the valuation done in the August will be valid for March?
So I will repeat the question. The company, so I will say that Mr. Prasad, you are telling that even though it is today done, it is valid today. Whether it will be valid after 2 months for other allotment is not clear. So the same question is asked similarly. The company allotted shares on right basis to foreign shareholder in August and March. Will valuation report is August is valid for March?
No, according to me, no.
No, it will not be. It will not be because after the allotment again the composition changes, valuation changes. So it
Mr.
cannot.
Hari? Mr. Hari?
Yeah, sometimes is what happening, report valuation report date is different, valuation date is different. First, we have to clarify these two dates. Valuation date is different from report date. Okay. I am, while doing the valuation, okay, I have to freeze my valuation date first of all to see the worth of the company. Suppose if you ask me, what is my company value as on 31st March 2022? What is my company value? Okay. Or you may ask, what is my company value as on 30th September 2022? Okay. So you are asking that your company value as on particular date. So this is called a valuation date. Report date can be on or after any date. Okay, on the 31st March 2022, I am giving the report today. So today is my valuation report date, but I am certifying the valuation date as on 31st March 2022. So people should very clear that these two things. Okay, RBI in 2-3 instances, I also come across depending upon the RBI officer. If I give the report today, certifying the financials of 31st March 2021, listen carefully, even he is accepting. Okay, sometimes, okay, depending upon the how you are convincing the officer. Some people are asking the financials should not be older than 6 months. Okay, so actually, if you ask me by subject and logical, the financials should not be older than 6 months. Okay, not the report.
Very interesting. Yeah, based on that, you have to carry out. So in
Yes.
that case, what would be your answer to this question? That who can, no, sorry, that the company allotted shares in right basis on foreign shareholders in August and March. Will valuation report of August will be valid for March?
Not.
No, ma'am, it will not be valid.
Not.
If you are issuing a report in August 2021 and same valuation report you are using for March 22, it will not be valid.
Okay.
I also want to add something regarding the date of valuation.
Yeah.
Okay, so one case I have come across is a very renowned case in India, in which there were the license with the company which were expired as on date of valuation. Okay, so the other valuer valued it at 0. So all the assets of the company, because as on date of valuation, the license are not valid. So if the valuation was say 12,000 crores, so the assets were valued at nil because the license are not valid. But
Right.
this should not be done because as on date of valuation, though the licenses are not valid, you can value all the assets and deduct the cost of renewal of license, which was hardly say 3-4 crores. Okay, so value of assets is 12,000 crores or whatever, 10,000 crores, less value of getting license renewed and the procedure 5 crores. So unnecessarily people value saying that it is have to give the minimum like that. So
Right.
the of settlements which may or the client would be wishing to do, but it is not the case.
Okay.
So that angle also has to be validated.
Yeah. There is a question from Mr. Hitesh. Who can give valuation for share exchange ratio where listed entity is transferee company? I'll repeat. Who can give valuation for share exchange ratio where listed entity is transferee company?
I feel so in this thing, the register valuer as well as the merchant banker both will work. But because this transaction, if it is listed, it has to work through merchant banker. With regard to exchange ratio, they need to take a valuer report from the registered valuer, because SEBI is also now insisting that the valuation should be done from the registered valuer, except a few other, LODR parts. Mr. Hari can, I think, give a more input on that.
Sorry, just I missed out. Could you please once again, madam?
Who can give valuation for share exchange ratio where listed entity is transferee company?
Okay, yeah, registered valuer can do.
Okay, merchant banker not required?
No need of merchant banker, madam. Registered valuer report can do. I will give you two things here. Okay, two perspective. Suppose private limited company is merging with the listed company. Okay, first part is, as a private limited company, valuation is required, and at the same time, as a listed company, will allot the shares for exchange ratio. Okay, so valuation report can be given by the registered valuer with the mentioning of both the valuations, either listed company and unlisted company also give the exchange ratio. Based on this, as per the SEBI circular, in case of mergers and amalgamations, there is a circular saying that fairness opinion can be given by the merchant banker based on this valuation report. Okay. Okay. This fairness opinion is different from valuation. Okay. Here, merchant banker will not do any valuation. Please keep in mind. He will simply, he has to see the minority shareholders has been protecting or not. This is the SEBI view, first of all. Okay. If merchant banker feels that the valuation has been done by the registered valuer, he can reject also. Okay. So the point here is fairness opinion means what? He has to give a fair and justifiable manner. The valuation has been in the interest of the each and every stakeholder has been covered or not. And also he will, at the same time, he will vetting of entire valuation has been done by the the respective valuer. Okay. So this is the process in case of exchange ratio.
Okay, very interesting. Fairness report. Okay.
Yes. Fairness opinion, madam. Only opinion.
Not report. Valuation report. Fairness opinion. It is an opinion.
Yes. Yes.
To protect, to check the minority, interest of minority. Yeah.
Exactly.
Yeah. Okay. There is a question from Ms. Monali. In case of foreign transaction is involved, is it only merchant banker is mandatory as valuer? Yeah,
I'm coming to that point. Actually, two things I wanted to explain first of all. Okay. Registered valuer is not recognized under the FEMA. First point. Okay. Next point question is, suppose registered valuer is a chartered accountant, what will happen? Okay. Example, Prashant is there. He is a practicing chartered accountant and at the same time registered valuer also. Okay. So now, as a registered valuer capacity, he cannot give the valuation in case of foreign transaction. Okay. But as a independent chartered accountant practice, Prashant, he can give his individual capacity as a practicing CA. He can give the valuation report for the foreign transaction. And at the same time, they have one more option given under the FEMA regulation saying that merchant banker also can give the valuation report in case of any foreign transaction. But they have some question already, I think next slide maybe. They have some, put a clause saying that. Sorry, madam. Yeah, please.
No. I think that limit.
Yeah. I'm coming to that. See, in case of 5 million USD, more, this transaction value is more than 5 million USD. you should compulsory take the valuation report from a category 1 SEBI registered merchant banker only. There is no option to go with the Prashant or any practicing CA in our example. Okay, madam?
Okay. Okay, there is another question. What are the valuation requirement under ESOPs for private companies at the time of granting option?
Yeah. Anybody panelist can take or can I take as your wish?
Yeah, you take Mr. Harry. I will add the fair value of ESOP, of course, need to be taken by the registered valuer. The balance is open. You can take it up.
See, in the ESOP, two things are there at the time of grant. Okay, at the time of grant, we have to do the option valuation. Okay, option valuation can be given by anyone. Okay, option valuation can be given by anyone. Then at the time of exercise, there should be a tax implication which should be borne by the employee, that is perquisite tax. That time you have to do the fair market valuation also will be there to exercise that price has been beneficial or not. Accordingly, tax expenses will be booked in the under the Income Tax Act. So in the two instances, valuation will come into picture under the Income Tax Act particularly. In a sweat equity, I think we have covered previously. Then I think no need to discuss anything. Now, Prashant, you can.
Yeah. So in case of grant, there is a scheme, and in that scheme has to work. I don't think so. Separately, the valuation is required from a registered valuer or a merchant banker. They are a specialist who does it. But with regard to once you do the fair valuation for the ESOP, to take a fair value as a base, there you require a registered value report. That's what is defined in the regulations also.
Exactly.
Okay. Okay. Thanks. There is if a CS certifies a form, do they have to check these things before annexing the valuation report to the form, or will the onus be on the valuer only? This is with reference to the license renewal part clarified by the panelist. Please clarify role of certifying PCS in the case of such valuation reports which are annexed to the form which they are certified. Panel.
I believe my friends want to clarify who's responsible. So my clarification was with regard to a company who's requesting for the valuation. The PCS work is not to review the valuation, because his role is to only file the form. However, the company secretaries, those who are working in the corporates, their responsibility is what that I was clarifying. And of course, valuer responsibility is always there.
Yeah, the same thing I told, that as a company, you have to take a valuation report from particular kind of valuer. So you have to check that valuer from whom you are taking that valuation report is eligible. If you don't check that and then take the valuation report, then you are non-compliant, and that's why you are responsible. So I can say PCS can take that you have checked this, that valuer are eligible. So that way it can be.
But I believe they should have a small checklist with them, so their team should just put a checklist to the client before giving them this, certifying things is compliant. They should fill it and say that, yeah, this is what has been compliant.
Yeah.
So it will be better for their compliance also.
Yeah. Yeah, there is another question. Is it mandatory to have valuation report for granting of option?
Yeah, as I said, madam, we have to get it option valuation to book in the for accounting purpose also.
Okay.
Yes.
Now
this you may take from a valuer, you may take from merchant banker, or there are other people also who can provide such reports.
Yes. Yes.
Okay, so it is to be taken but not necessarily registered valuer, right?
Exactly.
Yeah. Now where or what, where law prescribes?
For what?
Taking a valuation report for granting option.
There is no particularly law. It is open. It can't be, as an independent valuer. Yeah, it is independent valuer. That's all.
So it is optional. That's why you can take it from other.
Correct.
Yeah, it is not.
So my friends, what Surya is saying that it has to be done. Now, who does it? It's a separate part. Whether registered valuer, merchant banker, or any independent valuer, or or in-house valuer also, but they need to have this input, then only they can do the accounting entries and all this.
Okay, Mr. Hitesh, it's clarified that for accounting entry, what is your base? That base you can take it from anywhere, but take it. That is the point. Again, I think Neil is asking, so let it be. The question is that in case of sweat equity shares issued at discount, whether valuation done by DCF method should be by MB or by RV is sufficient under Income Tax Act.
Yeah, first of all, I have a basic question who has asked, can the shares can be issued at a discount or not, first of all?
This we discussed in a great deal when we discussed about issue of shares. And in sweat equity, this is specifically mentioned in the provision. Mr. Neil, you can.
Yeah, ma'am. Yeah, so Hari sir, in case of sweat equity share, it is an exception. We can issue share at discount to the directors and employee for providing their know-how. So yes, that can be possible. But my question is that as per Income Tax Act, if you are going through a DCF method, then as per the rule 11 UA, I think something, the merchant banker come into picture. But the section 56 of Income Tax is saying that if you are issuing share at premium, then only merchant bankers requirement is mandatory. But our company is issuing a discount, although method is DCF. So what will be the scenario?
Yeah, I will ask one more question to you. Again, you can answer only. Suppose your book value is coming 20 rupees. Okay.
Okay.
You are issuing shares at a book value. Are you issuing shares at a premium? Or are you issuing shares at a discount?
Sir, my method value of share is 5 rupees and I'm issuing a discount.
No. I'm asking, suppose your book value is coming 20 rupees.
Okay.
You are issuing shares at a book value only, example. Okay.
Yeah.
It is 10 plus 10, correct?
Yes, at par.
Yeah. No. 10 plus 10, no, not at par. Correct? At par means 10 rupees only, no?
Okay, fine.
Okay. So you are issuing shares at a premium, correct?
Yes.
So that means logically, if you are issuing shares at a premium, whichever method, either book value or discounted cash flow. Okay, you can do, correct?
Okay, right.
So now the point is, suppose if in case of sweat equity, your shares issued at a discount, as per the discounted cash flow, if the price is coming below the par value also, it will be valid, because there is no concept of, it should come from 10 rupees or 15 rupees kind of the issuance in case of, discounted cash flow.
Okay, sir. So in case of only at above the face value at premium, then only the valuation is required from merchant banker.
Yes.
Okay. Thank you.
Mostly on the discounted cash flow, that's all. See, under the income tax, blunt rule is, in case other than the book value method, any valuation will be done based on the future projections of the company will be done by the merchant banker only.
Right.
I'm not talking about the value. Okay. I'm talking about the methodology, because income tax has differentiated the valuers based on the methodology only.
Right.
Okay. There is as regards ESOP, the further comment was, it is not mandatory for the option granting, but for accounting necessary. So it is question, accounting is at the end of the financial year for ESOP. So they have to take valuation at the time of accounting at the end of the financial year. That is your view?
Yeah, while granting is different from at the end of the accounting year is different, madam, actually.
So at the time of granting, you should take it, and that is days for your accounting at whatever time you do accounting.
Yes, and one more thing, generally auditors will insist at the end of the accounting year also for booking the perquisite tax.
Okay, so valuation should be done at the time of granting or based on the record of at the time of granting. We can see that way. Valuation can be done anytime, but it will be based on the facts, circumstances, and the records on the date of granting. As you said, date of valuation and valuation report is two different things we have to keep in mind. So I'm keeping in mind. Now there is another question from Mr. Simpal Kumari, whose valuation report will prevail or be considered in case of issue of shares to a foreign body corporate through private placement, since different act prescribed different category of values.
Yeah, Prashant, are you?
Ma'am, two acts are there in this. One is Companies Act and one is FEMA. So in Companies Act, whenever they are be issuing a shares, they have to take a registered value report. That is what defined in that, because they need to ultimately issue a shares. And with regard to FEMA, of course, the merchant banker, chartered accountant, or chartered accountant as valuer, a registered valuer, you can take the report. So basically here, what we suggest to the client, you take a valuer report who is a chartered accountant and the valuer. So then both purpose will get, served, except that $5 million, what Mr. Hari has just said about, that is not breaching.
Yeah, Prashant, to counter this, I have one more point to add.
Yeah.
Yeah, Dipti madam, can I?
Yeah, please.
Yeah, please go ahead.
Yeah, problem here is, various acts, you have to comply with each and every act, Companies Act, income tax, FEMA. So, from the Prashant point of view, it's correct, but my point of view also, please, listen. Okay. But at the same time, see the valuation we are doing. Okay. The valuation we are doing based on the discounted cash flow for the time being, you assume. I have appointed Mr. Prashant to do the valuation. Okay. He is a registered valuer. Okay. He has done the valuation. As he said, at the same time, he is also a practicing CA. So you can, because fund is coming from US. Okay. The company has to satisfy the conditions under the FEMA regulations also. So as a practicing CA, the same report you can submit under the RBI compliances also. Fine. But what about the Income Tax Act? Because Income Tax Act recognize merchant banker in case of discounted cash flow valuation. Okay. So the conclusion I am giving simply, so you have to take it 2 reports. Okay, to satisfy merchant banker report, to satisfy under the Income Tax Act or FEMA, either way, and anyway registered valuers from the under the Companies Act. This is one option. And one more option, like Prashant said, registered valuer come practicing CA to cover FEMA and Companies Act, and take the merchant banker reports from under the Income Tax Act.
And hopefully, maybe in next 6 months down the line, the government is also working on, having a registered valuer in all the acts, or maybe one, combined acts will come to have a registered valuer to do valuation in all other requirements also. So hopefully that time this will solve. But as of now, what Mr. Hari said and what I said, you have to choose the option out of that.
So you have to take 2 valuers' opinion.
Yes.
Yeah.
What did the one side we are talking to what you are doing the ease of business, on the other side you are putting so many things.
No, ease of doing business in the way, because we are finalizing all guidelines. So ease will come now.
Later.
Now, Mr. Hitesh has asked, in my opinion, no valuation report is required for listed company. Am I right? Honestly, I'm not getting in which context, Mr. Hitesh, you asked this question.
Sorry.
It is regarding option.
Okay.
As regarding option, we said that Mr. Hitesh, for granting option, law does not provide. But we said that voluntary you have to require, because you have to account. You have to arrive at some base. Neither listed nor unlisted. For granting option, the law do not provide obtaining valuation. What the panelists say, that before accounting the granting of option, you have to take the valuation. That is the point. Am I right, panelist?
Yes, ma'am.
Okay, there is another question from Mr. Shiv Kumar. If the value is different from merchant banker and register value and CA, then which value should be considered?
Yeah. First point is valuation is an independent valuation. Independent valuation will be done. Okay. That means registered valuer on his own independently he will arrive the valuation, and at the same time merchant banker also will independently arrive the valuation, or maybe practicing CA or whatever it may be. Okay. So independent registered valuer or independent valuation means what? So the valuation will be done based on the information provided by the management and future projections may or may not, depending upon the methodology if other person is using. Sometimes may not be the same, sometimes same also, sometimes there is a difference between these two. Okay. One more thing, people has to understand that fair market value. Okay. Example, my mobile phone is say 1 lakh rupees. Apple phone 1 lakh rupees is my today's phone. Okay. I will sell this 1 lakh. Means what? I will not sell below that. No, that is called a fair market value. Okay. So over and above, you can sell it. Maybe I can sell 1 lakh or 1 lakh 10 or 1 lakh 50, whatever it may be. So the fair market value is a floor value, which will be over and above the company can allot the shares. Okay. Suppose the registered value or valuation maybe say 500 rupees. Okay. Merchant banker value say coming to 498. In these situations, which value you wanted to adopt? I will say 500 only.
So whichever is higher, you can see. That is a base. It can't go below that, right?
Yes.
Okay. Okay, thanks. I think we attended all the questions. Simple, you can start. And we have limited time, so you have to move fast. Yeah.
Now the registered valuer requirement under the IBC. IBC mentions the registered value means the registered valuer as mentioned under the Companies Act and rules thereunder. There are some brief given the situations where the valuation is required under the IBC. So these are the, in case of voluntary liquidation of corporate, there is a requirement of valuation under IBC. Under section 46 of the IBC, there is a requirement of valuation. And further, under regulation 27 and regulation 35 of IBBI, insolvency resolution process for corporate person, there is a requirement of appointment of registered valuer. And so the registered valuer is got to appoint for valuation report. Next is the valuation of asset intended to be sold. Under regulation 35 of IBBI, it is required. In case of initiations of liquidation, there is further requirement of registered valuer. In case of appointment, in case there is a resolution professional is appointed, he shall within 7 days of his appointment appoint one registered valuer to determine the fair value and the liquidation value of the corporate debtor will be determined. And next is the under regulation 34 of the IBBI, fast track insolvency resolution process for corporate person regulation 2017. It is required to appoint the registered valuer. Now coming under the valuation requirement under the FEMA. Under FEMA, there are two main cases where the valuation is required from the registered valuer. These are, first is the case of FDI, where the issue of shares, equity shares or compulsory convertible instrument are made of an Indian company, which take place between a resident company and non-resident company, then FDI is attracted and hence the valuation is required under the FEMA. And the second case is the case of overseas investment, where the Indian company acquires or transfers shares in an overseas company. Then also valuation is required. I further mention who is required to provide the valuation certificate in this case under FEMA. If the transaction is related to swapping of shares, or if the transaction value exceeds to $5 million, in this case, registered valuer will be the merchant banker only, which are registered with the SEBI, category 1 merchant banker. And in another case, CA can give. As regarding the method of valuation for ODI, no valuation method is prescribed under the FEMA. And for the FDI, valuer may adopt internationally accepted principles. Further, as per FEMA, transfer or issue of security by person resident outside India regulation 2017, transaction to take place at arm's length price only, and that too in accordance with the internationally accepted method. Now I'm covering the valuation requirement under the SEBI.
1 minute, 2 questions, quick questions. There was certified public accountant. What is different between that CA and that certified public accountant? And internationally accepted accounting standard or international standard. Can you clarify these 2 points? Panel.
I believe
Prashant?
CPA, it has been mentioned, right? Certified Public Accountant is a CPA,
Right.
or it is cost accountant. What? Mr. Hari, can you just put a thought on this?
It is certified public accountant only. It is not a cost accountant. Okay. Yes. See, I'll tell you, in case of ODI, overseas direct investment, okay, generally the valuation will be done by the merchant banker who is registered under SEBI, or maybe merchant banker who is under the foreign laws. Only will be these 2 people only will be allowed to do the valuation in case of ODI investments particularly.
Right. Okay. And as regards international, next slide, Simpal.
Yeah. Internationally accepted principles, madam, generally discounted cash flow. That means future projections of the company, because always we have to keep in view of the going concern concept only. So this methodology only the popular all over across the world. This is generally we'll use for our, we can call it as a discounted cash flow. It is only the internationally accepted principles. So book value and all this is a very older methods. Okay, generally, we'll also in the startup valuation or you take any valuation, discounted cash flow is the main methodology we will generally use in case of even brand valuation. Also, the valuation will be derived ultimately directed to the discounted cash flow only. Otherwise, you will not get this kind of valuation at all.
So
Another question is there under FEMA. Is there any minimum years of experience required for CA or CPA to issue valuation report?
I don't think so, sir. Any experience has not mentioned. And if you observe keenly, okay, he has not mentioned practicing CA. He mentioned only CA. If you read properly.
Right. So any CA, not necessarily practicing.
That means you are a chartered accountant having a membership number can also give as per the wordings actually.
Yeah, rightly pointed out.
Yes, ma'am.
Yeah.
The only thing is you should not be an employee chartered accountant in the same company.
No,
Yeah,
it
exactly.
is not mentioned. No, Acha,
No,
same company.
Same company.
Yeah.
But what they do, they normally, whenever you process the payment or receive the payment, you need to give a certificate and which should have a UDN number. So wherever the chartered accountants are there, they generally check the UDN number, because on portal they always verify the UDN validity. So there is a catch on that.
So
though Mr. Hari is pointing out very well, but there is a catch on this.
Okay,
Yeah.
practically while submission you will not able to. So that.
Yeah.
So that means necessarily you need to be a practicing person.
Yeah, obviously. Prashant, you have scored another 100 marks.
Okay, Simpal. Next.
Yeah, one more thing, madam. Just I wanted to clarify one more thing related to that only. There is no concept of category 1, category 2, category 3 merchant bankers. Previously, it was categories was there previously. Okay, but the law has not changed. The SEBI category 1 merchant banker. Now every merchant banker is eligible to do the valuation. I mean to say there is no categories.
But we still
General
continue to read.
will use that categories. Okay. Yes.
All merchant banker, any merchant banker, registered merchant banker can do valuation.
Yeah, exactly.
Okay. Thanks for the clarification.
Yes, madam.
Okay, Simpal, go ahead, please.
Ma'am, valuation under SEBI Act and its regulation. Under SEBI listing obligation and disclosure requirement regulation 2015, there is requirement of valuation under regulation 87C subsection 1. There's a valuation 1 clause 2. And further, there is a requirement of valuation.
Madam, one second. What it says exactly, issuers with the listed security receipts on a recognized stock exchange. Okay. Generally, you can list your shares in the stock exchange, or debentures you can list, And one more thing in the, I think 2017, SEBI come up with, asset reconstruction companies, whenever they are issuing the receipts, okay, they can also list in the stock exchange. So for that, I think she is mentioning this 87C 1(2) with respect to any receipts, security receipts issued by the asset reconstruction companies, that is called ARCs. Okay, for that valuation, like NAV, they have to declare net asset value every quarter. Okay, so for that purpose, valuation is required. Yes, madam, please go ahead. Just I have one clarification.
So every year this valuation required for this kind of.
Every quarter.
Every quarter.
Every quarter.
Because
Yes.
quarterly they have to declare what is the NIV.
Okay, okay, thank you.
Further, under the issue of capital and disclosure requirement regulation 2018, there are 3 cases where the valuation is required. One is under the debt restructuring scheme. The conversion price of debt shall be certified by 2 independent registered valuer. Next is in case of preferential issue of a specified security for a consideration other than cash. In that case, the asset received against the issue of equity share shall need to be valued by a valuer. And the third case is under regulation 165, where in case of issuers shares not trading frequently on a stock exchange, the valuation shall be done and certificates shall be obtained from such valuer for submission to the stock exchange.
Anybody having any thing related SEBI matters, please ask me.
I think no question has not come as regard that.
Okay, yeah. I will tell you interesting one case after that, I think maybe.
Sure.
Yeah.
So the next regulation are SEBI issue and listing of securitized debt instrument and security receipt regulation 2008, where there is applicable issuers with listed security receipt on a recognized stock exchange is required. And the next is under SEBI appointment of administrator and procedure for refunding to investors regulation 2018. It is required. There are 2 applications for this. For valuation of property attached by the recovery officer, it is required valuation. And the next is for valuation before initiating the process of the sale of the property attached. In that case also valuation is required from the registered valuer.
Madam, can I share one of the interesting case?
Yeah, please.
Yeah, sure.
Yeah. Please go to previous slide.
Yes, sir.
Yeah. In case of a preferential issue. Yeah. See, PNB Housing Finance is a listed company. Okay. The company is going for a preferential allotment. Last year, I'm telling the story entirely with respect to last year. Okay. In case of a listed company, the market value will prevail for the valuation of the company. Okay. Presently, the valuation, how to do the value in case of company issuing a preferential shares to the anybody, 90 days or 10 days trading, whichever is higher, you have to issue the price accordingly. Okay. Last year, what happened? The PNB Housing Finance Company wanted to issue preference shares to the foreign party like Carlyle Group. Okay. Board of Directors has approved the preferential allotment, and for the the preferential allotment, even in the limited company also, you have to conduct an EGM or AGM, whatever it may be, to approve the shareholders also. Okay. Now the point here is the valuation will be determined predominantly based on the market value, whatever the prices have been determined through the formula given under the SEBI ICTR regulations. Okay. Well, but what happened? The articles of association of the company saying that the preferential allotment will be done in case of any in the future, valuation done by the registered valuer. the articles of association of PNB Housing Finance Company saying this. Okay. Now, the question is the valuation compulsory required from the registered valuer, or because it is a listed company, okay, whatever the prices determined, whatever the formula given by the SEBI, maybe 90 days or 10 days or previously 26 weeks or 2 weeks was there. So is it required, that formula is the question. After the issuing of the approval from the board of directors, they have applied for in principle to the stock exchange, and the EGM is yet to conducted, maybe after 30 days or 21 days, whatever the under the Companies Act. In between, SEBI pointed out saying that your articles of association saying that registered value or valuation is compulsory. So how you are complying this, the clause? Okay. Why they are asking this question is the market price that time 500 odd something. Okay. The valuation formula given under the stock exchange is coming around maybe 385 or something. Okay. But here market price is going on the price of 525. Your valuation is coming only 390. Okay. That means you are allotting less price to the foreign shareholder. This is their contention. So one side, if you argue, their argument also valid, because their strong point is the valuation should be done by the registered valuer also, as per the articles of association. Their point is, are you complying with or not? They have described very elaborately in the case. Okay, even responsibilities of the board of directors has to approve or not because of this clause. Okay, so whenever we will do the valuation, first of all, my point is we have to take care of each and everything. We have to check with the first articles. Is there any clog? Is there any restrictions are there? And at the same time, what are this is called a due diligence. Okay, whenever you do the transaction, due diligence means it is not like a due diligence of entire life of that company. The particularly related to respect to that transaction only you have to do the at least through the due diligence. Okay, as a company secretary or as anybody who is sitting there. Now the point is the issue. After that they went to SAT, again Supreme Court. Okay, in the last September they SEBI has gone to Supreme Court also. Because even the company side, that means PNB Housing Finance also, they are not they are not leaving the transaction as it is. They want to fight also, proving that once it is a listed company, predominantly it will be applicable listed company share prices only. It will not be effect of articles of association. Okay, so because of both are government related parties, they can fight each other. But in the normal company, I mean to say, like a small company, in a listed company, if you are sitting in that position, you have to comply all this. Based on this case, they have amended in the January 2001, saying that in the preferential issue guidelines of ICDR chapter 5, they have specifically included one provision saying that in case of your articles of association, saying that the valuation will be done by a registered valuer, the price is more than the market price, you have to adopt the registered valuer price only. Okay, so you have to keep in mind all these things. Just I am sharing this practical case before you. That's all.
Okay. So you have to take when there is ODI only higher value.
Yes, ma'am. Articles of association says.
The article, of course. Yeah, sorry. Article says that.
Yes.
Interesting inputs. Thank you.
Now, this PNB case was there on the national headlines.
So there is a question from Mr. Shiv Kumar, whether specified securities is defined under SEBI. I believe the same term is used in Companies Act, which is yet to be prescribed. Can this be clarified, please?
Because as I said, the shares are not different. Security, you have to take it from SCERA. So it includes shares, stocks, debentures, convertibility, options, everything has been covered there.
Okay, thanks.
Even the previous Companies Act has prescribed share warrant. Right. 114 and 115 under the 1956 Act. But here in the Companies Act, we will not use share warrant. But in case of listed company, we will use share warrant also.
Right.
Yeah, please go ahead.
Yeah, Simpal, go ahead.
Yes, ma'am. So there are two further cases where the valuation is required under the SEBI Act and regulation. Under SEBI Real Investment Trust Regulation, there is requirement of valuation report for the valuation of REIT assets to be done by the registered valuer. And the next is the valuation report are required for valuation of the INV IT assets to be done by the registered valuer. Under Indian Accounting Standard, fair value under Indian Accounting Standard 113, it is applicable to all those companies which are required to prepare the financial as per Indian Accounting Standard. So the valuation required under Indian Accounting Standard shall have to be carried by the registered valuer only. Next, we will cover the valuation requirement under Income Tax Act. So there are certain rules under which valuations are covered. These are Rule 11U, 11UA, 11UAA, and 11UB. And the valuation and income tax is required for the both share issue of shares as well as transfer of shares. As per Income Tax Act, two methods of valuation has been prescribed. One is the net asset value and another is a DCF. Under net asset value, the fair market of an asset is considered for valuation purpose. And the requirement, as regard requirement of a registered valuer, any registered valuer can do the valuation under net asset method. While the valuation are required to be done or is done under the DFC method, then it considers the fair market value of business based on the value of projected cash flow that business is expected to generate in future. So DCF method considers the, we can say, a kind of a time value of money, means what the money we invest today, and it must generate some money in the future. Under DCF method, Rule 11UA 2 clause B is applicable, and under DCF, only merchant banker is required to do valuation, share valuation. Here I mentioned a very brief where the valuation is required. In case of share issue are made on the face value, then there is no need of valuation report. Where the shares are issued on premium, then valuation report submitted by registered valuer is acceptable. Where the valuation is as per DCF method, then only merchant banker can provide the valuation certificate. And where there is the right issue made by the company, then there is no requirement for valuation certificate. This slide covers the applicable rule, sections, method, and who can be the valuer in case of fresh issue of shares and in case of transfer of shares. In case of fresh issue, there is a section 56 to clause 7B. And the method to be adopted for the fresh issue of share, any method can be adopted. It can be discounted cash flow method or it can be book value method. And it must be valued by the merchant banker. I think this is for the discounted cash flow method. And for in case of transfer of shares, this is the mentioned section. And the method to be adopted is the book value method. There is no clarification as to who can be the valuer. No, there's not prescribed whether it is required to be done by the merchant banker compulsory or another registered valuer. There are some complexity in getting the valuation report. Sometimes for the same transaction, we have to obtain the valuation report from the registered valuer. And in other case, we have to take the valuation certificate from both merchant banker as well as registered valuer. So there are some conditions prescribed where the valuation report is required from one person or it is required from both merchant banker and registered valuer. When the company, any company which is not a startup India, and it is issuing shares of equity or preference to person who are resident in India, and such issue is under private placement basis, here the company need to obtain a valuation certificate from both merchant banker as well as registered valuer. Next is when the valuation certificate is required from the merchant banker. So any company which is not a startup India registered and making right issue. In that case, we need a valuation certificate from merchant banker. Here, there is no requirement of obtaining a certificate from the registered valuer. And there is a third instance where the certificate, valuation certificate from a registered valuer is enough. It covers the case where the company is not a startup India registered and it is issuing debentures. It is issuing debenture on private placement basis and startup India registered and issuing equity or preference shares or debenture. In that case, valuation certificate from registered values will be enough.
There is a question, on what basis do we say that if shares are issued at face value, then no valuation is required? Only by doing valuation, the company will know its value of shares, is it not?
I'm not clear on the question, ma'am. Can you just?
The question is that on what basis we say that if shares are issued at face value, then no valuation is required. Because only by doing valuation, the company will know its value of shares, is it not?
I think so, is there not required any validation because the face value is which one you incorporate the company.
At that time only you decide. It's not that valuation. Your value, number of shares based on that value will be different. But face value means I decide that my I have one piece, I want to cut in how many pieces, it is my thing. I am not changing the value, I am not deciding the value of that one piece. Only I cut in how many pieces that I am deciding.
Hello.
Yeah.
Ma'am, Shiva here.
Yeah.
Yeah, can I intervene?
Yeah, please.
Yeah. See, I think the slide, the earlier slide said that, if the shares are issued at face value, then the valuation is not required. My interpretation was, suppose, it is not at the time of incorporation. Suppose if you're issuing, further shares, was that the interpretation? Suppose if you issue further shares and if it is at face value, then there is no valuation required. Was that intention in that slide?
No.
I'm a bit confused.
That is not the intention. The intention, see, any valuation, any action which you take with regard to further infusion of fund or equity shares and all, as per the law 62(1)(c), you have to take the valuation. Whether it comes on a face value or above face value is a subject matter of the assumption, presumptions, and the situation of the company as always.
So any issue of Simpal, can you go to the earlier slide, please? So it may clear. So there it is not like that way. Panel, on this, the question is there.
Ma'am, I think this is as per the Income Tax Act. Under Income Tax Act, if his shares are issued on face value, then no need to obtain the valuation report.
Okay. The Act says, Mr. Sivakumar.
Yes, ma'am. Under Income Tax Act, it is mentioned.
Yeah, we are discussing the respective act. It is under the Income Tax Act when she is discussing.
So under Income Tax Act, if you are issuing share at a face value, even in future, then you don't require valuation report under Income Tax Act.
Yes.
Under Companies Act, it is different.
Yes, ma'am.
Can we go ahead, Mr. Sivakumar, or panel, you want to say anything further? We can go ahead.
Here we will discuss the different aspect of valuation of shares under different acts. Under Income Tax Act, Companies Act, and as per FEMA.
Okay, 1 minute. Huh?
Yes,
in further to that, I think so. In further to that question is that there are some instances wherein loss-making company, while issuing right shares, do not take valuation report. Is it fine? You mean to say that when the loss-making company issues shares at a face value, they are not taking a valuation report? Can you unmute and clarify what is your question, please?
Hello, this is Krishna here, and yes, you are right, ma'am. This was with reference to face value of share.
Okay, so if loss-making company issues shares at a face value and don't take valuation report, it is fine.
Yeah, so actually, I just read that he's saying that whether valuation report is required or not. I feel so. Yes, it is required. My question was that it is required because even if see that it is mostly what is defined in the act is on the basis of trigger, whether it is a loss making or profit making is a separate part. But as per the trigger, if you are issuing any shares, you need to have a valuation report. That's what the regular rules as well as the Companies Act says.
But if I am not issuing at a face value under Companies Act, then I cannot issue the shares at a discount also. So this for non-applicability of valuation report for face value shares is only for income tax purpose. So for that purpose, for income tax purpose, we again come to the situation that if a loss-making company is issuing shares at a face value, still under Income Tax Act, it do not require valuation report. Yes, as per income tax, my understanding says yes. However,
Yes.
panel, the question here,
Yes, yes. Income tax purpose is right.
it's not required.
See, ideally, income tax purpose is for the trigger when the capital gain and all is. It is not an event when in the Companies Act where you need to submit this report to the income tax immediately. Yeah. So I'm saying the income tax report. Why do we take, as Mr. Hari has already said, that this is for the safer side. Whenever some transaction scrutiny happens or comes, we can say that we have a valuation report which prescribes that this is the this is on the fair value with regard to a loss-making company also. And see, you need to have the valuation report for a valuer. For income tax, there is no question comes because you are issuing on the face value only. So capital gain will not come.
Okay.
Mr. Hari can also add in case he wants to add something in this.
Yeah. See, one thing, two things here. First of all, in case of loss-making company, if you are issuing the shares at a definitely to justify that valuation will be required. And if you are issuing the shares at a book value, maybe positive, I am positive or negative book value. Okay, there is no DCF. So in case of a positive, definitely you have to get a valuation from the accountant definition as given, that is a practicing CA. Okay. And coming to the loss making, okay, loss making company issuing of shares at a face value, okay, generally no need of any valuation is required. But at the same time, practically, some assessing officers or someone, justifying that, even then also people are asking nowadays the valuation. See, strictly, I'll tell you one thing. We can't go according to the law, particularly in respect of valuations. Okay, all are professional. Just I wanted to convey only one message saying that don't go with the law. Okay, and at the same time, if you required or not.
Hello.
Some disturbance is there.
Mr. Hari, your audio is not.
I think some internet issue is there.
I think some interpretation.
Yeah, he has mentioned audio problem. Okay. We will add on at the end if the time permits, Mr. Hari. Let's finish it off. It's near to 1:30. Simple, you will be fast now. No more question we are entertaining now.
Yes, ma'am. So under Income Tax Act,
Participants, you can write to us, put it on a chat box. Same will be forwarded to panel, please. Thank you. Yeah, Simple.
Yes, ma'am. Under Income Tax Act, there is a requirement of valuation report. Yes, but there are some relaxations has been provided. Under Companies Act, it is required to get valuation report. And under FEMA, valuation report is required if shares are issued to non-resident. And what are the relaxation from valuation report? Under Income Tax Act, if the startup, there is a startup registered and whose revenue is less than 100 crore. And the second case when there is foreign funding, and the third case when there is funding from VC funding. In that case, there is relaxation from valuation report under Income Tax Act. Under Companies Act, in case of right shares issue, there is no requirement of valuation. And in FEMA, it is not applicable. And who will be the valuer? Who will be the valuer under the respective act? Under Income Tax Act, it shall be SEBI registered merchant banker. Companies Act as defined registered valuer, and under FEMA, it can be CA or merchant banker. The relevant section and rules has been mentioned there. And about the method of valuation under Income Tax Act, it can be DCF method or NAV method. And under Companies Act, method of valuation will be internationally accepted method or as prescribed method under the respective rules. And under FEMA Act, internationally accepted pricing method will be used. Coming next is the maximum or minimum threshold limit. Under Income Tax Act, the value per share derived shall be the maximum issue price. Under Companies Act, the value per share will be the minimum issue price. And under the FEMA also, the value per share will be the minimum issue price. It means under Companies Act and in FEMA, we can issue shares more than the value arrived at. But under income tax, it is just reverse. We can issue below the maximum valuation as arrived at. So there's the implications of these. Under Income Tax Act, if the issue price is more than the maximum threshold limit, then the difference amount will be charged in the hand of the company. Under Companies Act, the company cannot issue share below the minimum valuation price. And under FEMA also, if the issue price is below the minimum valuation limit, it shall be considered as non-compliance with RBI. So concluding it, the company shall issue shares at a price that shall be more than the price derived under the Companies Act and FEMA. However, it should not exceed the price arrived under the Income Tax Act. So the companies can register as a startup to avoid the requirement of merchant banker report under the Income Tax Act. So in next slide, there is a valuation aspect in case of transfer of shares, which is covered under section 56, subsection 2, clause 10. Where the shares are transferred at a value that is less than the fair market value, in that case, the income tax shall be chargeable in the hand of the buyer. Fair market value for the purpose of secondary sale of shares shall be where the company is a listed one, it shall be the listed price, and where the company is unlisted, it shall be computed using the formula as prescribed under Rule 11 UA. There are some valuation aspect in case of transfer of shares under FEMA. So under FEMA, when the shares are transferred from a non-resident to resident, the transaction price shall be greater than the value derived by the CA or merchant banker using the internationally accepted method. And about the exercise of ESOPs, when ESOPs are exercised, the perquisite value shall be taxable in the hand of the employees. Here the perquisite means the fair market value of the shares less the amount actually paid by the employee for getting the shares. Fair market value under Income Tax Act for the purpose of ESOPs is, in case of listed company, it shall be the average of the opening and closing price on the date of allotment. While in the case of a listed company, value is as determined by the merchant banker. There is no relaxation to any startup. In case of
Excuse me, it should not be date of allotment, it should be date of exercise. Because date of allotment and date of exercise both are different.
Different, right.
Okay, so noted. Next, we will be discussing the important case laws under the company.
I think simple, we can just name the case law and we can close it.
Yes, ma'am.
Because 1:30, we should not cross the timeline.
The first case law is under Companies Act. The important case law is the Rakita Overseas Private Limited versus Salter India Private Limited. About a case that is mentioned in the slides.
And the thing that I think main is that, can you go to that earlier slide?
Yes, ma'am.
It says that basically valuation of shares should not be questioned as long as unbiased and has followed accepted principles.
Yes.
Okay, fine. Next.
Next is under this case law is under Income Tax Act, Vodafone M-Pesa Limited versus PCIT. In this case, assessee choose the discounted DCF method for ascertaining the share value, but the assessing officer changed the method adopted by the assessee and shifted to other method. So in this case, Bombay High Court held that the assessee has option to adopt any of the method. He can adopt net asset value method or DCF. In such case, assessing officer can't compel assessee to adopt any particular method for valuation purpose.
Okay.
Next is Agro Portfolio Private Limited. This is also under income tax. In this case, there was no evidence produced for verifying the correctness of data supplied by the assessee. So in this case, assessing officer just rejected the DCF method because no sufficient evidence was proved how the DCF method was done. So in this case, the assessing officer was right in rejecting the valuation adopted by the assessee.
So that means again, it goes back to say here, it is the responsibility of the company to see the valuer is actually done the right job, etc., etc. What the panelist was mentioning, that is what it throws out in this case. Yeah.
Okay, that's all. Simple.
Ma'am, 2-3 cases or more.
No, I think we should stop here.
Yeah, no issue, ma'am, as you say.
I think we should stop here. Just last question, it's one line only in yes or no. Can infrastructure company incurring loss issue private placement of shares at a face value without valuation report since stall start after completion of project?
I think, ma'am,
yeah,
we have already, discussed this. As a trigger point, you have to follow the law. What value comes, whether it is face value, below face value, and all is a different part. But you have to follow the law.
Okay. Okay, Mr. Hari, you want to say anything? On the
Yeah, madam. See, that's why I think Prashant said, no, see, unless and until you do the proper valuation, suppose if it comes, even the DCF also, if it comes negative, anyway, you have to option the issue of shares at a face value. Okay. So valuation is must as per the, Companies Act. And at the same time, I'm telling you one more thing to all our participants saying that, don't think that while issuing of shares itself is the valuation is required. Okay, even though convertible instrument, preference shares, I'm telling preference shares, maybe 10% preference shares also, 5 years coupon, you have to get it valued. If we strictly interpret the securities definition, whatever is covered, we have to get it valued. Frankly, it is as per the law.
Yeah, because preference share is also security, so why it should not be valued?
Exactly. We have to
very interesting point.
Yeah, you have to discount this dividend or coupon rate, whatever it may be, to the present value, and according to the valuation is required. So see, our professionals, my request is wherever the possible, you have to complain. See, hardly matters the valuation. Get it one more certificate, get it one more merchant banker, get it one more registered value certificate. Why can't we avoid unnecessarily tomorrow, client will be problem. Just take precautionary. What makes difference? Frankly, okay, I understand it is a cost, but see the wherever possible, to make it available, particularly in the compliance part. You can avoid future, implications of some different regulators. This is my just submission.
Absolutely right, sir. Absolutely right.
Thank you. Thanks, participants. I thank all the panelists, Mr. Prashant, Mr. Hari, Mr. Abhishek, and Mr. Sanjay. Thanks all of you for your valuable time or all valuable inputs and sharing your experience. Each one was interesting to listen. Time was short. Sorry, extremely sorry that we were not able to just give justification to and time as regards to each panelist. Participants, thanks a lot. We have tried our best to finish in the right time. Thanks a lot. Thanks everyone for being with us. Thank you.
Simple, you have done an excellent job in putting the PPT. You have nicely covered everything, each and every aspect. I think this is quite useful. And once again, my personal thanks to all the panelists who have come here all the way, who shared the experiences, spent the enough time. And I'm sure it's a good learning experience to personally to me and also all the participants. Thanks a lot. Thank you very much.
Thank you, Simpal. Thanks, everyone.
Thank you, Dipti madam. Excellent job you are doing.
Thanks.